Today, we're going to talk about what happens to my health insurance if I lose my job. So, if you're watching this, I would assume that you have either lost your job or that you think you might lose your job, or you're worried in some respect about possibly losing your job or your spouse losing their job. And I just want to take a moment and say that I've been there, and that is not an easy situation at all. It's uncertain, it can be scary, and when it comes to health insurance, that just complicates everything, doesn't it? Well, in this video, I'm going to go over what are your options when you lose your job so that you can feel a little bit more empowered, even if the situation right now is a little stressful. And if you decided or are deciding to fire your job, then this video is also for you. So the first option if you lose your job is COBRA. Now, a lot of people don't know this, but if you lose your job or you leave your job, willingly, COBRA is a program that will allow you to keep your employer group health plan for a period of up to 18 months. Okay, and so you can keep the same plan that your employer has that you were used to and that you were used to using and you were comfortable with, or that your family was comfortable with, for up to 18 months. Now, there's a couple of caveats with that. If your company decides, at their enrollment period that they're going to change to a different insurance, then the COBRA would apply to whatever insurance the company is now going with. Okay, but the point is that you would get access to coverage, and typically the kind of coverage that you had with the employer is pretty good. Especially if it's a huge company, those tend to be the best kind of plans with the lowest out of pockets. They tend to be PPOs. And so you can keep it via COBRA. Now, in some cases, you can keep it a little bit longer. So that's why it's important to work with a licensed advisor who can actually help you. And when it comes to jobs, you can usually get that information from the HR person or whoever's administering that plan. Now, keep in mind that COBRA is great in the sense that you get to keep the same plan, but now you have to buy it and pay for it yourself. And so most people are really surprised to see how expensive these plans can be, because when they were with the employer was the one paying the majority of it, if not all of it. And so now when you've got to pay for it, a lot of times people find themselves in a really difficult situation because now they're unemployed and they're not making money, and now they've got to pay for this really expensive COBRA. So it's not always the best situation for that. When I tell people that it may make sense is if they're in the middle of like a large claim, or they're getting treated for a chronic condition, or there's some cases like that where maybe they've met their deductible, they're maxed out of pocket, and it might make sense if they can afford the monthly payment to keep it through the end of the year. But you really need someone to help work that through with you, and I would be happy to help you if you need that. So let's say COBRA is not an option for you, or you just want a different alternative. So are you married? Does your spouse have a group plan? Is he covered by his employer or her employer? So what I would do is just contact their HR administrator, because the thing is when you lose your coverage from your own job, that triggers what's called a qualifying life event, and then you now have an ability to jump onto your spouse's plan through work. Even if it's not the enrollment period, you have like a special pass to get onto that plan, even though the rest of the company is not, because you lost your coverage. So what you'll want to do is just ask for the plan and see what the employer is willing to contribute to the spouse's coverage, if anything. Typically, it can be an expensive option. Again, it's not one that, unless the employer is really contributing to your coverage too, not just to your spouse's, it may be a little bit too expensive for you. So the other option would be the individual marketplace. So the marketplace is under the Affordable Care Act, which also governs the employer health plans, right? So a lot of things are going to be similar in the sense that they have to cover wellness and preventative, and it has to be free. On the marketplace, you're going to want to notice the network that you're in, because a lot of the networks are more limited. So the doctors that you get to choose from, the ones you can go to get your free wellness and preventative visits, are going to be from a smaller list than what you were used to when you had your employer plan. But if you stay within the network on those plans, you do get free preventative. Now, there's HMOs, there's EPOs, and there's some that are kind of pseudo, they say PPO, but they're, just keep in mind, just to make it real simple with Marketplace, anybody can get on. So even if you have a chronic condition, you are able to get onto a Marketplace plan, and you have a 60-day window from the day that you lose your health coverage through your job. And that triggers your qualifying life event to now be able to jump onto the Marketplace outside of open enrollment. So let's say you go to the Marketplace, and what I would recommend is going to Healthcare.gov, or I use a site called Health Sherpa.com that I like. It's pretty easy to use, and that's how it was designed for the regular consumer, not the agent that is supposed to know a lot about insurance. So they really try their best to break it down on there. And if you go into the Marketplace and you put your zip code and what your estimated annual household income is, let's say your income is too low for that year, you may not qualify for Marketplace at all. And so typically that same system should tell you if you qualify for Medicaid or one of the Medicaid programs in your state. And every state is different for that. So you'd want to really see what they tell you when you put in that income amount. If you don't know the income amount that you're going to make, try a couple of different ones just to see, and you'll get an idea of where the threshold is. So where you don't qualify for Marketplace, but you do qualify for Medicaid. Then there's the private market. So on the private market, you've got short-term plans, and then you've also got some underwritten PPO plans that can be short-term and also longer-term. And so with short-term plans, those typically you can have for 12 months, for 3 years. But the point is they're really all short-term as far as you're concerned, because they're not locking you into any specific amount of time that you have to have the plan. So when I say short-term, that's just what the insurance company's promises to you, that once they enroll you in that, they're going to allow you to keep it as long as you pay your monthly premium for whatever period that the plan is promised for. Some are up to 3 years. Okay, some of these plans do underwriting up front, but it's not very thorough. And so some underwriting is done on the back end. So basically it leaves it up to the insurance companies to decide if they're going to pay a claim or not. So just be a little bit careful with the short-term plans, but they are great solutions for some people. And a lot of times they'll give you access to big PPO networks, sometimes even nationwide ones. And the other option that I like the best and that I have for my own family is a longer-term underwritten PPO plan. And so where the underwriting comes is a little bit different than on the short term, is that it's thoroughly underwritten up front, meaning that this company will take your full health picture and situation into account when deciding whether they're going to approve you or not. And so what that means is that once you're in, you don't have to worry about a claim not getting covered. You know what's covered and what's not. It's more transparent. And it's actually a plan that if you decide, like I did many years ago, that I was unemployable when I got tired of working for somebody else, that you can keep these kinds of plans for the long term. So if you're going to be self-employed and you don't ever want to rely on a job again for your insurance, then these types of plans are the ones that you could keep to the long term, and some even till you're 65. So as you can see from the video, there's tons of options. It's important to work with someone who's licensed, who can guide you through it. I do that for all my clients, and I love what I do, and I would love to support you. So if you need support with your situation, you can find me at alexthehealthagent.com, and also follow me on Instagram for all the fun videos that I have all about health insurance, stuff that you didn't even know that you need to know. And if you liked this video and found it helpful, or you know somebody that lost their job, please share this, and also comment, like, and subscribe.